Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as the Chief Executive Officer of Treasury Consulting LLP. And today we would be covering another interesting topic in technical analysis, which is gold. Now, in this, we would be covering the valuation of the gold as per we would be covering that how the gold is trading, because gold is also one of the precious currencies and also acknowledged as you know acknowledged as the volatility gauge across the globe. And certainly the valuation of the gold is come to a question every time when there is a speculation, about the market. Now what exactly which is happening is that there is a lot of stress which is happening in the financial market. And if you carefully look at the chart, which is right up front you can see that nobody in this world cannot disagree with the fact that it is not a mean reverting chart. It is a high class mean reverting chart. Now what do you mean by mean reverting chart? Something which goes up, it has to come down. Now here we go. Here it is going up, here come down. Here going up, come down. Here going up, come down. Here going up, come down. Now here you going up, here come down, and now it is again coming down. But if we see this chart, we get to know that this is not exactly mean reverting. This is a deferred mean reverting. Now what do you mean by that? In this chart you will see that the gold is taking a lot of momentum. Once if you give, it is very much visible that if you clearly see that this mean reverting is based upon a drift. Now what do you mean by drift? That once the gold is going up, then it is going up. You can see wherever in the chart. Like if you see here, that you can see that from where roughly $1,080 per ounce to it went to here, which is roughly $200 per ounce. You can look at here when it was roughly 1207 or roughly 1200, it went to here, which is approximately 1373, which is approximately $173 per ounce. So carefully we can examine that when gold is going up, it is going up, no doubt about that. But we see that when it is coming down, it is not coming down much. So this chart is more of a green than of a red. And if we compare this chart with the GBP and some other currencies, then we will get to know that this is more or less that way. And also another thing which we would like to highlight here is that sitting today the valuation of the gold is decreasing. Now that is something which we should discuss, and we are sincerely interested in discussing such things, because dollar is gaining strength. Agree or disagree, but dollar is gaining strength. And why dollar is gaining strength? Because dollar, the neighboring currencies or the competitors of the dollar, which is your Chinese yuan, GBP and the euro, they are losing, and dollar is simply gaining strength. Now since dollar is gaining strength, in that sense the gold is getting down. So if you compare this chart with the dollar index, you would let us compare this chart with the dollar index. You will compare this chart with there is no scope. You will compare this with Nasdaq 100, Dow Jones. Here you go. You can see that downstairs you have dollar index, and you will get to know that the above one is the Dow Jones. Dow Jones is an American index. Now, right, if you see that, if you carefully see that, in Dow Jones is up, not very fall. Like take an example here. Here dollar gaining strength. Here gold gaining strength, and it has risen to 1250. Now here if you see that Dow was falling. Here you see Dow was falling. Now let us take us here. Reverse side. Here it was down. Gold was getting down. Here gold was getting down from 1250 to approximately, I think, roughly 1000 or so. And if you see above, you will get to know that the Dow Jones was up. So the dollar and gold are having reverse correlation. Now let's that is a well-known phenomena. Let's move at here. Here gold is going up and it is going down. Nasdaq going down. But sitting today, something wrong is happening in the market. Something which I think we should not trust upon. Something which is not a fault of the chart, or something which we cannot say no to it, because financial markets are changing very fast, and every second day a new step is coming up. So we cannot say no to it. To be very honest, right? In my personal opinion. So what exactly is happening, that in the last 2-3 weeks I saw that the indexes across the globe are falling down, or they are either stagnant. Dollar is gaining strength momentarily in the sense that we all know that next week dollar is heading for a technical recession, because Senate need to take a call whether they would be in a state to hike the debt ceiling or not, and I certainly doubt that Senate is in a position to hike the debt ceiling now. But still, dollar is heading towards a temporarily backlash. But still, if you carefully see that the dollar index is approximately 97, which is very big. If you see that the dollar index is 97, which is very big, to be very honest, it should be 92, 93 something. So what we can drive out of it? What we can drive out of is that, of course, for our next 1 or 2 weeks, the dollar will continue to gain strength, because the next time when the Fed needs to take up a call whether they are seriously interested in raising the rate or not is in January, not now. And by December, Indian Reserve Bank also need to take a call whether they are looking for cutting the rates or not. 99.99% they are looking forward to cut in the rates. 99.99%. But still, so if we look this chart, we can carefully see that the gold is getting down, and it might get down to 1200. My personal opinion is that today gold is trading roughly $1254 per ounce, and I think that gold will fall to maximum by 1204, from where we need to see that where it is going. But considering a fall or the strength in the dollar, we can seriously need to expect that gold will get down to $1200 per ounce. That is for sure. Nonetheless, we agree or disagree here. Now we are going to cover up one technique, which is Bollinger Bands. 1 minute. We are going to cover Bollinger Bands. Very good, very good. Bollinger Bands. Now what we are going to compare, let us change this to 2240. Here. And now see. Now you can see that if you are taking a period and remove this Dow Jones from here and see the gold, you can clearly see that if we take 40 moving average into consideration, because Bollinger Bands, that is divided into 3 parts. One is the medium, one is the higher, and one is the lower, and it is just like a kind of forest, to be honest. Now now if you carefully see that if we take 40 into consideration, then above part is little higher than the chart, and the below part is little lower than the chart, is also little higher. It has just touched. So, and if you look at the Bollinger Band clearly suggests that where the chart is getting widened, it means there is a probability of a volatility in that. Now here we go. Now if you look at this section, you will get to know that there is a lot of cloud we have in this section. Now this cloud is started at roughly 1188 and it has ended approximately 1300, because this was the period when the dollar was down and when the people lost their faith on the Federal Reserve that they are able to rise the rate or not. If you carefully see that, this is something which is getting clouded. This part is getting clouded. Of course, there are other parts also which are getting clouded, not to mention this. But if you see, if we look at that, then we can make a sense that currently gold is trading at approximately $1,255 per ounce, and maximum it can bend to 1,200, which we can clearly envisage right here. But there is no certainty about that. Certainty in the sense that, like today, Chinese yuan has just joined the SDR, and we should not forget that, because when Chinese yuan were not the part of the SDR, they were doing everything what they really interested in doing. They were not worried about anything, and they should not be. But now they need to worry, because their every action, it will be treated as the action of the reserve currency of the globe. And another alternate thing which we need to learn here is the technical default which is looming on US dollar. Because of course we need to appreciate the fact that US dollar is heading towards a technical default, and in this technical default US might not declare, they won't say that they won't be able to pay the bills and etc, but they would say that they would surely defer it. As simple as that. So this way the valuation is gold of turning very tricky, and the Treasury Consulting LLP is having a view that gold would turn up to 1,230 and 1,240 in the near term, and the flash crash of the GBP and the valuation of the GBP would continue to be very serious while deciding the gold. All the dollar bulls and all actions need to be considered very carefully. So the gold is getting a very right sized commodity nowadays to track. And certainly, the last but not the least, I would like to mention that people are more dollar neutral than dollar bulls today. Even though the dollar index is trading at 97 approximately, I still hold a view that people are more dollar neutral than dollar bulls. And considering this, if this would happen, then we will surely see that gold will move towards 1,300 again very early, very soon. With this, we seriously thank you very much for sparing your time. You know our contact, which is Treasury Consulting LLP @gmail.com and Rahul Magan 8 @gmail.com. We thank you for that, and we love to see you soon. Thank you.